Good evening, good evening. Welcome everyone to the Journey to Become Wealthy. My name is Kelvin Reed, and today is Thursday. I'm here to give you all a nice little update for the week. Hopefully, you all watched this morning's video, so you saw the good news. We saw CPI data come in at 7.7% and a massive market rally to follow. But before we get into all of that, make sure you like, subscribe to the channel, hit that notification bell so that you get notified when I make videos. All right, so let's talk about it. Let's talk about it. This morning, we got CPI data at 7:30 Central Time, AM. We got the CPI data coming in at 7.7%, which was expected to be 7.9, almost 8%. So we came in lower than expected, meaning a great rally because now there's a certain anticipation that the Fed could potentially slow down more than before. Right? There's already anticipation that in the month of December we're gonna get a 50-point basis hike versus the 75 basis points, and that they may actually start becoming dovish, meaning that they're not as aggressive on these interest rate hikes as they were before, because that could potentially mean that hey, if the CPI data did peak out next month, could it be even lower? And people are feeling really good about this, right? There's a level of confidence, a level of certainty and reassurance that's being pushed through this market. Right, so this was a great thing for the market on yesterday, and I told you guys actually on Monday that we could look forward to this because we had a lot of different major catalysts this week, especially with earnings and the CPI report and the election. So we actually still have the election going on. The results have not yet been finalized, but they are expected to be finalized on tomorrow, Friday morning. I want to say up to about Friday lunchtime. If the Republicans win, you guys, if the Republican Party wins, you can expect another major rally. So listen to that caveat, right? If the Republicans win, you can expect another major market rally on Friday. So keep that in mind, right? Keep your eyes open for that. Until then, I think we might still see some green tomorrow, early first part of the morning. I expect some green, especially out today. Now, today we may have overextended things. I still expect to see some green because this is just major positive news, and the people are excited. We've been seeing red days after red days after red days, bad news after bad news after bad news, and everyone is just excited at the first sign of some sort of relief for the year 2022. So that's what we got. So talking about that, let's just take a look at the markets, you all. We see the markets posting the best numbers they've had since 2020. In a day at least. The Dow up today 3.70%. S&P 500 up 5.54%. We have not seen 5.54% this year. This is crazy. The Nasdaq up 7.35%, and which was supposed. This is, I think, apparently the first increase it's had in, I want to say, history in a day for the Nasdaq, in its history at least. And we see the Russell up 6.11% for the day. Now, when we talk about this stuff, we got to look at some of these small companies, and they are beautiful, right? We're going to look at our stock heat map in a moment, but I just got to go out, right? I got to extend this bad boy. So on the Dow, we know the Dow has been doing exceptional. The exceptional on the 5-day, 4.5% up. On the month, up 15%. On the 6 month, up 5.91%. Now here's the part where we really care, right? Because how high is it from its lows? Are we entering back into that bull market? So from the lows, the Dow is currently up 17.37%. So we got about another 3% before we go back into some bull territory and we get 20% up from the lows. And that's just on the Dow now. The S&P 500 and NASDAQ, those are totally different stories. So we're going to take a look at those as well. So on the S&P 500, on the 5-day, we are up 5.24%. On the month, we are up 10%, 10.24%. The 6 month, up 0.5%. And on the year to date, we got to check it out from those lows, right? From those lows, we are only up 10.6%. So you see the Dow doing 17% numbers from the bottom, whereas we see the S&P 500 only doing 10.6%. So that goes to show how the Dow may be, diversified a little bit better than the S&P 500. But both of them are up doing their thing. Now the NASDAQ, we know this is tech heavy. We know we're getting a lot of these tech earnings. So I'm really going to be surprised to see what we can find tonight. So on the 5-day, up 6.4%. Look at that beautiful rise right there. On the month, up 6.60%. The 6 month, we are still down 2.20%. And let's see where we are from the lows. Oh my goodness, don't look like we made very much of a comeback. Let's see if we can find the low. 10, 3, 2, 1, 10, 3, 4, 2. So that 10, 3, 2, 1 is going to be our low for this year. And right now we're only up 7.68%. So 3% less than the S&P 500 and 10% less than the Dow on the NASDAQ. Now I know we don't often go into the Russell too deep, but we're going to check it out anyway. So the 5-day on the Russell, 4.24%. 1 month up 10.34%. 6 month up 8.72%. And let's see where we are from those lows, right? We are up 12.81% from those lows. So that's still great. The Russell is like the in-between. It's the happy child, right? So looking at those numbers, got to point out our fear and greed is now sitting at a 62. Our previous close was 63. So we got a lot more running. We are back in greed territory, you all. You know what that means, right? Money is being made in this market. Hopefully you all have been dollar cost averaging. Hopefully you are seeing some green. Hopefully you are taking some profits, because that's what this thing is all about. Making money, making money. That's what we're here for. Now, I had to show you, right? Because when's the last time we seen this bright, beautiful green like this? It's been quite a while, right? It's been a while since we've seen this thing bright green like this. Every sector is up. Technology green. Look, Apple, Microsoft, both up 8%. Google up 7.58%. Meta has been blowing stuff out of the park, up 10.25%. Tesla up 7.39%. Amazon up 12%. I mean, it just got beat down. Let's not forget, it just got beat down 20% based on its earnings. So up 12%, it's recovered over half of what it lost for earnings. Financials, they're up, hot and heavy. Green, healthcare up. And now again, it's fairly flat. It's not up as high as the rest of the indexes, but still up. We got healthcare, diagnostics, and research up pretty high and heavy. Industrials up hot and heavy. Consumer cyclical. Really, everybody is making money. The money has been made, y'all. So just like I told you, if you wake up in the morning, you're like, man, what do I look at? If you'd have came here, you'd immediately saw bright green, bright green, bright green. You could have chose from any of these many awesome picks today and made some money to the upside. Now you would have had to been quick. You'd had to been quick, because it all ran up in the first 30 minutes to an hour of the day. But there was still money to be made. And even then, there were some downturns, like Tesla, for instance. Tesla started the day off down. Before it came, it was up in the pre-market, came down the first 10 minutes of the market. I want to say 10, 15 minutes of the market. I made money on the way down, and I saw it shooting back up and made money on the way back up. Just to be real with y'all, $800 profit day. $800 today alone, just off Tesla trades. So that's the type of money that can be made out here, right? So let's check out a couple of these articles before we keep going on. So stock futures rise slightly after S&P 500 posts its biggest one-day rally since 2020. Now, before I get into this, there has been a lot of confusion, right? Because, we were in a technical recession, right? We've had 2 negative quarters of GDP. And so the first quarter, it was down negative, hot and heavy. The second one, we saw it cool off. And this third quarter, we're actually back in the positive. So this means that we are technically out of the recession now. We are no longer in a recession as of right now, right? And it is the month of November. So we have 2 months. The quarter is almost over. The year is over, right? So we have November and December. And that's when we break into 2023. So before we can technically be back in another recession, it will technically have to be 2023, because that means 2 quarters, right? 2 quarters. We will definitely be in 2023, and this is with the hopes that it is not as bad as expected. So we've already taken a major beating, right? We've already seen 3 bottoms, and we're running up as expected, right? We discussed this. 3 bottoms and a nice run up according to history. Now, this doesn't mean that we won't come back down at some point, but breaking into 2023, there's a high potential, and a lot of research says that we should see another recession. And this one could potentially be a government-announced recession. Right now, this one, they were saying, hey, we're not in a recession. Employment was too strong. The economy is too strong. Inflation is extremely high. We are not in a government-pronounced recession, but we know that based on the results, the 2 quarters, GDP quarters, that we were in a technical recession. So as of right now, we are out of that recession, and that could also be a point of a positive catalyst, right? So we have CPI coming down. We have the elections finally, getting a chance to switch hands between the Democrats and Republicans. But right now, there's still a lot of FUD because it hasn't been decided yet. And we have the fact that we are currently out of that recession, that technical recession. So those are already three positive catalysts that you can look forward to, along with the holiday season coming up, which usually always points towards a rally, right? Election years, we get a rally, and we always get the Christmas rally, right? So those are two rallies that we usually get. And we can, hopefully we can see that. We expect to see those, but hopefully we do see those this year. So we expect to see a lot of short-term rallies in the near future. Got to keep that in mind, you guys. Got to keep that in mind. So don't be surprised and expecting that we're going to continue to see bright green days. Just know that in the short term, let's make this money. Always be ready, right? Be prepared, properly prepared, right? Don't be surprised. Be prepared for whatever comes next. So out of this article, just a couple things I want to point out. So, of course, it says in regular day trading, the major averages posted their biggest one-day rally since 2020, with the Dow being up 1,200 points. All the indices are on pace for a winning week. Great, right? Tomorrow, we expect things to continue running up because this is just amazing news. We expect even more amazing news from the election. At least that's what we're expecting. It's not factual yet. It's not written in stone. And the Dow is up 4% on a weekly basis. The rally came after the Bureau talked about CPI data, right? We already know that. Markets across the board are euphoric. I already said we are excited. We're excited to see these low numbers about inflation. Following the cooler CPI this morning, but today's CPI report, while indicating that inflation is moving in the right direction, does not suggest that inflation has been rooted out of the broader economy. And that was said by Quincy Crosby, Chief Global Strategist for LPL Financial. And it does not suggest that the Fed's job to restore price stability is complete. So they're basically pointing that the Fed still has a lot of work to do. So again, do not think that the red days are over, but definitely got to appreciate the small green days because we've been dollar cost averaging through this bad boy. We got lower than expected averages. We're at a point where we can be making money yet again. Also, if you with me, we're trading options, so we're definitely making a killing where possible. All right. So the last thing I got to talk about tonight, home owners. So the interest rates, mortgages rates rise back above 7%. So it was discussed that mortgage rates dropped from a good CPI number. I want to say yesterday or something like that, they had dropped from that 7% to about 6 something. I want to say about 6.7%, 6.5 to 6.7%. They dropped. And it was an awesome opportunity to get a hold of. And this number right here may actually be wrong. It could need to be updated again. But the 30-year fixed mortgage averaged 7.08% in the week ending November 10th, up from 6.95 the week before, according to Freddie Mac. A year ago, the 30-year fixed rate stood at 2.98%. So if you got in a year ago, you got in lucky with the 2.98% because look at it right now. That's a 5% increase on the interest rate for your mortgage. Last week, the Fed announced it would raise 7.75 basis points, the sixth rate increase this year, and the fourth consecutive hike of that size, while the Labor Department announced Thursday that consumer prices rose in October by 7.7% from a year ago, less than expected. The Fed still has far to go in its effort to tame inflation. So the housing market is the most interest rate sensitive segment of the economy. So listen, the housing market is the most interest rate sensitive segment of the economy, and the impact rates have on them home buyers continues to evolve, said Sam Cater, Freddie Mac's chief economist. So I'm pointing this out because when we initially began this journey, we were looking for other streams of income, passive income. Real estate was going to be one of them, right? But as the year kept going, we realized this was not a good opportunity. Going back to our word flexible, right? We stayed flexible. We remained flexible. We were able to switch gears. We were properly prepared to get in, put our money where we needed to so that we can be profitable for the year. Instead of putting our money into a home where we'd be losing value, we continue to invest in this real estate for the long term. Instead of heavily investing into stocks, we started to stack cash and trade more options. So we're constantly building up cash, preparing for next year when prices potentially come even lower so that we can buy even lower. And we continue to dollar cost average on those extremely low days. So like yesterday, I bought more Apple stocks at 135.37, I want to say. And today, Apple is now at 142. So you can imagine I am very excited to see that. I actually started to buy another 100 shares of Neo, but like I told you all, I'm as invested in Neo as I can possibly be. And it ran today, but it did not run like Apple and some of the other big companies did, like I would expect it. So yes, those are the things you gotta do. You gotta remain flexible. You gotta be ready for whatever this economy throws at us. And right now, we are just preparing to try and make money, right? Our year is almost over. We are almost at day 365. We have continued to be profitable. And, you know, our goal switched from making 25 to 50% on our portfolio to just beating out the market, right? The major indexes for the year. Today makes video, I want to say day 342, right? Day 342. So we have a few more days, a couple more weeks, maybe a month before our journey is over, and we're gonna review our results. I may take some screenshots, post some results, but we're gonna get into that when we get to that point. Until then, hopefully you all enjoyed tonight's video. Make sure you like and subscribe to the channel, hit that notification bell, share this with your friends and family. Let's all make some money together, and I'll see you guys later.